Hey everybody, Tom Gentile. Welcome to our midday report. It is Monday, June 16th, 2020. Glad to have you here. Hey, it's going up. Is it going up? Well, there's some mixed messages on that. We're going to share that with you and a couple other things here as we get going, guys. A lot to cover here. Obviously, notice the time change. This is going to be going forward. So tune in with me every Monday at 11:45, and we'll be doing the same thing, just a little bit different time frame. So glad to have you here, and let's get started right now. Let's hop into my screen. And I'm going to share my screen with you. Let's see, which one do I want to give you? I want to give you that one right now. So anyway, let's get this thing off because I don't need it here in the studio. But guys, a lot to cover today. I mean, I don't even know where to start here other than, well, let's start with news. All right. So big news stories coming into Monday morning. Number one, oil is falling. All right. Growing fears of coronavirus second wave. So that's happening. They had the lockdown part of China, part of Beijing. This was we heard on the weekend. Also, there's a big stink going on Capitol Hill about who got the $500 billion in taxpayer-backed coronavirus loans. I thought taxpayers were not on the hook for that. All right, but that was a little bit of a mistake because it actually turns out that they said taxpayers weren't on the hook for the $1,200 checks, but they are on the hook for the loans. All right. So I'm sure we will not hear the last of that yet. And the one thing I thought which was really interesting was the Robinhood brokerage accounts. I mean, I saw this this was a big deal. This was happening. We saw this happening last week that a lot of folks at Robinhood that have Robinhood accounts were just simply buying in to anything going higher, getting that fear of missing out. And of course, last week they got crushed. Market violently reverses. We saw that big 6-7% down market, and that was happening. That was happening on Thursday. I thought we were going to get a spill into Friday. It didn't happen. All right. Then over the weekend, we saw the big move down. It really started Sunday night and got really heavy Sunday night. And then from there, we start to see a recovery. So where do we go from here? And more importantly, what's out there that's really worth looking at in the marketplace? So that's what I want to cover with you. Let's start with some dispelling some myths on coronavirus. Okay. Is it out there? Yes. Is it real? Yes. Is it worse than the flu? Well, that depends on what you consider worse in terms of number of cases or number of deaths to cases. But I found some charts I want to share with you. And these are 4 charts that I find very, very interesting here. And these are trends. All right. These are trends. And as traders, part of what we look at are trends, okay? And so, you can't just look at what happens in one day or one weekend. I know that the news, wants you to look at that and wants you to get involved in. In fact, I've stopped looking at the news for the most part on the weekends simply because I just, I get overstimulated from enough of it Monday through Friday. So I no bueno. I turn that stuff off and try to detox a little bit, at least till Sunday night. And then I try to get a good idea what's happening in the markets overseas. But I don't look at the day-to-day stuff per se. I look at trends. These are some interesting trends. Upper left-hand corner. Let me grab something here that I can utilize for today. So I'm going to grab a little, let's toggle on here so you guys can see exactly what I'm doing. All right, there we go. On ventilators, all right, trending down. So we had a big spike up, and then we had another little spike in May, and now we started trending lower. All right, upper right-hand corner, in the hospital in the U.S. due to COVID-19, obviously big spike up, but that trend has also been going down. All right, COVID deaths in the U.S., 358, which is the lowest since late March. All right, when we were bottoming in the market at that time. All right. Cumulative deaths have gone higher, and that's a number that's going to keep going higher. And if we had one on cumulative cases, that's going to go higher as well, too. All right. And then finally, in ICU due to COVID-19. So you see the 7-day average and also the weekly numbers also trending down. They're now at their lowest levels since April. Will these trends continue? That's really the big thing that is on the minds of everybody. But I want to say this to you. Think about this, all right? Let's go back, and if history has any chance of repeating itself, then this is the history you want to look at. When we were rising in cases and we were rising, big time in deaths and then also in ventilators and in ICU, all right? What was the stock market doing? It was going down, all right? But we bottomed in the stock market in late March, all right? In a lot of cases, when we started to really look at this data. Now, as the data is starting to get better, think about this. We bought the rumor in April and May. Are we going to start more and more selling the news? That's the thing I want to stress to you, because as we're reopening, as we're starting to do more reopenings, the markets are starting to come off a little bit. All right. And that could be due to coronavirus cases popping up again. It could be due to social unrest. It could be due to all the protesters and many people, not just protesters, but many people getting together in large quantities. Could it just be the news that's broadcasting all of this to us? So again, I think we're in this good news is bad, bad news is good scenario. And now we're starting to see more and more good news coming out rather than bad news. And I think that's going to take a toll on the markets. We're definitely going to see more volatility. So let's get into my daily and intraday market averages. We'll look at all the ETFs that I look at. Stocks on my radar today. And I've got some that I want to include, like, for instance, drug trials. We'll talk about oil. We'll talk about travel. We'll talk about Hertz. And Hertz now is selling cars into bankruptcy, but that's not the only thing they're selling. And so we'll get into that. So let's really get cranking on this and see what we can come up with. All right, so slide over. Here is S&P. There's the big move on Thursday, all right, where we just opened and just sold off like crazy. Now, I want you to take a good look at what's going on today, because what's happened today is we have come back to Thursday's low. We're sitting right around 300 on SPY. I think this is a very good area of resistance. I'm going to be watching this number today. And I got short. I got short on this market. Somewhere, I was about 30, I'm going to call it 304, okay? And then I covered a little bit below that. But I really want to get short again, because I see this area right here as a great area of resistance. The open on Thursday is a fantastic place for resistance, which is just above the 310 mark. In fact, I'm going to call it 311. All right, so that's a great resistance area for those of you that are in the short game. All right, give you an idea. I like SPY to the short side. I just don't want to sell it right now. I'm looking for a little bit of a pullback, and I'm looking for us to remain in this area. And I might get in and take 3 positions. One very close to where we are right now, one about 305, and about maybe another one around 310. And then if we jump above and we get above this high and close above this high that happened on Thursday, then I'll take my lumps and move to the side. That's what we do as traders. You get in, you have a plan, you have an exit plan, win, lose, or draw. Now, if I did get in these levels and we start to drop, where do I look to get out? I would look to start taking profits right around the 275 level, all right, down here, because that's where I think that next move would be. And then, of course, hold on the remainder for Mr. Toad's wild ride, as we could move back down and see another move to the bottom, all right? So it has been an interesting move. Remember, it took 1 month to make the move down, 2 months to make the move back up. So remember, the markets drop about twice as fast as they rise when we're in choppy environments. So just keep that in mind, all right? I still like the July options, the 1 month options to the downside on the put side with SPY. Let's take a look at our friends and see what they have to say. All right, so TLT has regained its position in the 163s. All right, if you were listening to me a couple weeks ago, I was saying 162 was a really good area of support. We broke through that. But in the last week, we've jumped back up again. Now, I want to share something with you. Let's go to a 30-day chart. All right. Now, I'm gonna reset this, and we're going to be looking at the S&P. All right. So we're looking at, again, SPY. Now, count back with me. This was Thursday. So today, Friday, Thursday, Wednesday. All right. Monday, Tuesday, Wednesday. That was where we had tops in the market. All right. So let's back off and look at this again. Let's look at it from bonds perspective. So at TLT, where was TLT Monday, Tuesday, Wednesday? All right. So again, today, Friday, Thursday, Wednesday, Tuesday, Monday. Now, Monday, we were down here in the 150s. But look what happened on Tuesday. Bop up to the high 150s. Wednesday, we closed above 160. Wednesday was a very interesting day because the bond market was already telling you there was some concern out there in terms of stocks being at the levels that they were at. That's the piece I wanted to mention to you right now. Okay? And so as bonds are now trying to move higher and get back up into the mid 160s, this is a signal that all is not well in the stock market. How about cash? Cash was terrible last week until about Wednesday when it bottomed. Now, Thursday, cash made a big move up. Obviously, that makes sense since the stock market made a big move down. Friday, we ran above that. Today, cash is off just a little bit, but it actually opened higher than it closed, which tells me that we're not out of the woods yet if you're a long trader in the stock market. Oil markets, this is probably the best one to look at here because oil traveled all the way up. And again, this was Memorial Day weekend, and we moved outside of that. And we were really looking for about that 10 days after Memorial Day to really push lower. That didn't happen. It happened after the 8th of June. And on the 8th of June, that was just a week ago, we had just come off the post-coronavirus highs and it moved lower. Now, oil opened much lower this morning, has come back in a big way. But I want to talk about that morning session. I want to talk about some of those stocks that might be looking at that next potential move, all right, in terms of where they may be going. All right, so that's USO. So stocks, bonds, currencies, commodities. Oh, here's one of my favorite long-termers, and that's gold. Gold again, 158, came down to that 157 low, bounced off of that, got back up in the mid 160s, started a little lower today, just above 160, is pushing higher, close to closing in on 162. Again, I like me some gold. All right. You guys, if you're no stranger to the videos here, I like gold. I like that gold is a long-term part of my portfolio. All right, long-term. Sold some 160 puts this morning for this week. Got $1 for them. See how those turn out. All right, again, if we go below 160 by Friday, I own more GLD. If we stay above 160 by Friday, I keep the $1,000 or I did a 10 lot. I try to do like 10 or 20 of those a week just to add to my position. All right. So that just gives you an idea. Long term on GLD. Why? Why am I long term on GLD? Well, it's simply this. If the government continues to print money, which I believe they will, because that's the only way they know they can get out of this, or they think they can get out of this, that just spurs on potentially more dollars out there than needed. Inflation, you will see food prices go up. You will see cost of goods and services go higher. And arbitrarily, you should see things like metals, especially precious metals, move higher as well. All right. So that's stocks, bonds, currencies, commodities. We could take a look at Bitcoin. In order for me to do that, I got to come over here and go into my crypto tools. And if we look at crypto tools, let's just go in and take a look at BTC. And I got the chart there. And here's the chart on crypto. Now, crypto we've seen in the last, looking back into April, this thing was trading below 7,000, made a nice big move to 10 and hit 10 and came off. And it went above 10 and came off. And even last week, we hit 10 and we came off. but we've also been getting down here around the 9,000 level, 8,509 and bouncing off of that. So if this is a higher low, then I should expect to see within the next couple weeks 10,500 as the next short-term target for BTC. All right. So that's what I see happening with Bitcoin. Okay, so getting into a couple of other areas that I want to discuss with you here, and let me bring those up. So stocks that are on my radar. Spiders have been down now 8% off of their recent highs last week to early this morning. And although we got a little bit of a pullback, where do we go from there? Before I jump into the other areas that I want to get into, stocks in the news, let's take a look at the intradays. SPY. Here is SPY. Looking at SPY here, folks, you can see that, and I'm just going to open these charts up as much as I can. All right, SPY you can see is coming up and very close to highs for the day. 301.33 is that opening hour high. You can come all the way down here to 296.72. That's the opening hour low. You can also see that we have been literally since this morning trending toward the highs of the day. All right, 296.74, that low. We ran up and we've been banging on that for a good part of the morning. All right, the close as of Friday was up here around just shy of 304. So we could come back up and we could see all of the losses of this morning erased. Right, so that is the stock market. What is bonds doing? Let's get rid of Hertz. We'll look at that one in a moment. Okay, so this would make complete sense that the bond market is pulling back and is now trading along these lows here, but still 163.31, not bad considering right now we're still up 0.62% on bonds for the day. UUP is trading slightly lower, as you can see here, but right now it's in the middle of its opening hour high at 26.30, opening hour low at 26.20. So really about a 10-cent difference between the high and the low on the cash. All right, and this morning, oil took a big bath, a very slippery slope for oil on the open, but it has just been trending up this morning. And guess what? Is now not down several percentage points, but now actually up fractionally on the day. All right. So let's take a look at what we see going on with a couple of stocks in the news real quick. So a couple of them I want to share with you. And actually, before I do, just to give you an idea here, for those of you who asked, I'm actually using the Thinkorswim platform here for looking at intraday charts. All right. I'm not endorsing Thinkorswim as a brokerage firm. I don't endorse brokerage firms at all. That's something I feel like you need to find for yourself. There's a lot of good ones out there. All right. And in my humble opinion, I think Thinkorswim is one of the good ones. Tastyworks. Charles Schwab has some great platforms as well. Interactive Broker. Robinhood's probably a good one for people just getting involved that are just want to be in the stock trading area or maybe in some simple options. All right, but they're more of a simple platform that's geared toward mobile traders. Right, so that's what I kind of see. That just wanted to throw that out there to you. Now I'm going to change this over, and we're going to look at a single chart right now because I want to show you a couple of stocks that are on my radar today. So let's first start with AstraZeneca, symbol AZA. Right. So come on. Oh, come on. All right, I'm going to jump to the next one. MNRA. Maybe I can get something here. mRNA, excuse me. mRNA. MR. One more time. Third time's a charm. NA. There you go. All right, up 4.42%. What's going on with Moderna Drug Company? So obviously they are one of several of them that are out there that are gunning for a vaccine with COVID-19. AstraZeneca is also one too. AstraZeneca's got drug trials going on with humans right now at Oxford University. mRNA has been talking to countries who want to buy their entire supply of COVID-19. All right, so that's what's popping them on the news too. But I want you to pay attention to these areas here. 63.56 and 65.45. We jumped below 63.56, and this right here was just an opening morning pop, and that we could see this stock continue to pull off. However, there's a lot of volume and a lot of intensity going up upon pushing this to the high side. I don't think any country is going to be able to buy up an entire supply of one company's COVID-19. I do think, however, that whatever country that the company manufactures in is going to probably have first dibs on a large amount of COVID, of the COVID vaccine. All right. Another one I want to talk about. So oil was down 3% this morning, and I was looking at a couple of the oil companies. So let's take a look first at ExxonMobil, who was also down. And this is just confirmation that oil is just making that big comeback. All right, here's the close of ExxonMobil on Friday afternoon. It was around $47.14. It had a low of $44.75. And you can see here, $44.75 was the opening low. $45.89 was the opening hour high. We cruised right past that. Right, so it's a very, very good chance that Exxon's going to be back, as oil is already back and covered its losses. For you short timers out there that like to potentially put on quick trades, ExxonMobil could see another. It's at 46.66 right now. So really looking at maybe about another 60 cents to get us back to that break even. That's entirely possible that could happen. All right. Another one would be Chevron, CVX. Take a look at CVX. You can see the same thing, but this one's lagging. All right. It's important to see that. The lag on CVX. So look what where Chevron was. It closed at 92, just below 92.50, opened, and the low this morning was 88.21. All right. Now, look at this. 90 is the resistance right now on this particular chart. So if I were to create a trade on CVX, show you kind of how this works. I like this one because it's a lagger right now. So what I would look at doing is I would pop in and let's say we go over here, and I'm going to go to CVX. All right, so I'm going to type in CVX. Just want to see what's going on with these options right now. They can't be as high implied volatility as they were this morning. So let's take a look at the calls. Maybe just a 1 week call option, see what they're going for. So the 90 calls, which are going to be better between the bid and the offer right now than the 85s. They're $2.31. This is still this is still a lot of money when you're looking at this stock. It's supposedly going higher within the next week. All right, within this week. So you got to make that $2.35 hurdle. All right. So when I go back and I look at the chart, that's all right. 88.21 to 80. I mean, this thing hasn't really made a 2-point move, just in just what we see right here. What's going on with Exxon? So I would go back and I would look at. Let's go ahead and jump over to some. Let's go back to my my tools. All right. I want to know a little bit more about Exxon. So I'm going to go in. Oh, excuse me, CVX. So I'm going to go in. I'm going to look at some charts. Let's look at some stock charts right now. And I want to look at stock charts, not on OHI, which also is now positive on the day. All right. So a lot of the oil companies have gone positive on the day, but CVX has not, and it's gone positive too. But well, no, it hasn't. It's still it's only positive being higher than it's open, but it's still way off from where it could be, right? This looks like a very interesting opportunity here. So in this case, I want to look at some more things than just what's going on with the stock chart. I want to see the volatility. So let's add a 7-day at the money implied volatility chart to this. Look at this, all right? This thing, vol's actually been on the rise as it's dropped. So when I look at this chart, I don't see something that I want to get into buying call options. What I see is something where I could possibly do, I call this the poor man's covered call. The poor man's covered call is an in-the-money call spread, all right? It means what I'm looking at doing is possibly buying, let's call it the 85 calls, all right? These are in the money. They're trading for, they're not cheap, they're expensive. They're 545 by 575, but I want you to keep in mind that most of that is real value. Now, if you look at the 90 calls, all of this is time value. So what I'm looking to do is put a trade together. And I'm going to go for the $3.25 limit. All right. So if I put this trade together, just kind of show you how this would work out. All right. And I'm not going to put a bunch of these in because I don't want anybody to accuse me of front running. All right. So I'll put one in. So I want to put this in at 325. I'm buying the 85, selling the 90s. I'm looking to do that for a $3.25 debit. Okay. So this is how I preview this order together. Oh, and I just got notice that I cannot in this room place this order according to our legal representatives. So I can only show you how this looks. All right. So you're really looking at like $3. Again, this is a $326 cost with commissions. But what we're looking to do here, and let me show you what this looks like when you actually put this on a risk graph. Right. So I'll go to options. I'm going to go to option chains. I'm actually going to create this trade. I'm going to create a short-term trade. And guys, you can follow this during the week and just see how it turns out. But it's going to have limited risk. It's going to have limited reward. Let's go ahead and update the charts. And I'm going to go in here and remember what was I looking at doing? Buying the 85 calls, selling the 90 calls. All right, that's a -1. And let me put the risk graph up, and I'm going to blow this up and show you what it looks like. Remember, here's where it was. It's saying the mid price is $3.16 or $316 for the contract. Your max profit on the trade is going to be 184. The max risk is 316. You might wonder, why in the world would I want to make $184 but yet risk $316? Well, there's something in this trade called probability, which is on my side. I'm going to show you that in just a moment. So the best this could do is give me a 58% profit. The worst that this could do is it could go completely against me and I could lose $316. That's absolutely true. This is what the graph's going to look like. All right. If CVX just stays right where it is and goes nowhere over the next 5 days, I make money. Even if it were to go down a little bit, I can still make money. The break even on this trade is $88.16 by Friday. All right. So what's the probability that I'm right? Okay, so statistical probability is if we simply see random market movement over the next week. I've got that queued in here too, down here below all this stuff. So I show a 51% chance, 57% chance of making money on this trade. Now, if 57% isn't enough for you, I get it. Okay? If you like the 50-50 chance of buying the stock with unlimited upside, but also a lot of exposure, you could go right ahead and do that. All right? If you like something that's more one-to-one, but don't want to pay all that money for the stock, then what you would look at doing is, let's go back to the stock and option tables once again. And I'm looking at the call options. What I would do is, let me clear this out real quick. So clear. Now let's go back where we were. Here's the stock price, $89.52. So it's really $89.50 is the at the money. We could buy the 89 call and we could sell a 90 call. All right, that's a 50-cent difference between the bid and the offer. So I'd want to do that for 50 cents. Risk 50 to make 50. You could do that for 48 right now. All right, so that could be a 50-cent risk and a 50-cent reward. That has a 50% probability. 50% chance you're going to be higher, 50% chance you're going to be lower. Now you risk roughly 50 cents to make 50 cents. That's a good way to create a synthetic long position without actually owning the stock, right? Something I wanted to share with you as we kind of finish up. And finally, I could not walk away from this group today without talking about Hertz. All right, so Hertz, symbol HTZ. Let's take a look at Hertz. Punch that in. All right, so here was the high last week. We were discussing this, and a lot of people were asking me on comment boards and through different ways of communication, what do you think about Hertz? And I said, I think it's overdone, and I expected to go back down to the $1 level. Well, what ended up happening? Tuesday's high, 578. Wednesday's high, 383. Thursday's high, back here at around 247. Then it got a little pop on Friday. All right, but what happened Friday afternoon? Two things happened Friday afternoon. Number one, Hertz came out with some news and they said, we are now selling cars in bankruptcy. The car prices, I went and looked at them. They aren't that great. All right. They're on the low end of average. In fact, I saw some of the true car prices that actually had better prices than what Hertz was trying to sell some of their cars for. I was looking at the high-end cars like the Land Rovers, the Cadillac Escalades. These were not that great in terms of price. But the even more shocking news, which hit this market this morning, was this. We saw a bankruptcy judge on Friday afternoon approve Hertz to begin offering more stock. So Hertz is going to go out and make another stock offering at this same stock symbol to try to draw in more investors and draw in more cash so they can try to weather out this storm. Now, initially, that's going to cause the stock to drop, but that might keep them in the game longer. And that could cause this stock right now is one of the biggest day traded stocks out there because it's cheap, because it's got a lot of volume going on in it. It's just amazing the amount of volume that you see happening. I mean, in the first 5 minutes alone, almost 9 million shares traded hands right there. All right. In the first 15 minutes, we got the hourly day range here. But unless things drastically change on the COVID-19 front and the travel front, then I feel like this one's going to just start to drift lower, lower, lower. I just have one thing to say. Probability is in the bear camp. However, the volatility risk are these pop-ups that you see, because as we notice, what's happening in Hertz, which doesn't happen with most stocks, is Hertz tends to go down slow and go up fast. All right. That's what we saw happening last week. All right. Look what happened last week as we pop up real quick and then we start drifting lower, lower, lower. All right. Now, what happens in the pre-markets to give us the open in the morning can have a lot of volatility too. But we get these big pops up and then we get these slower moves to the downside. All right. So what's happening with Hertz is the bear's taking the stairs and the bull's taking the elevator. All right, guys. So that is pretty much my show for you today. We talked about stocks on the radar. Let me give you the takeaway, which I talk about typically when it comes to this room. 90% of traders will trade what they think the market's going to do, and they're consistently wrong. 9% of traders trade what they see, which is better, but still can have some inconsistency. All right. 1% of traders are rules-based. That means that they trade not what they think. They trade what others don't see. All right. And that being said, I want to thank all of you for joining me again on this Monday morning. Again, recording will be out later on this afternoon by those fine folks at moneymappress.com. And until then, guys, have a great rest of your day. I hope that our time that we spent together was more educational, a little less entertaining. But in most cases, guys, thank you very much for joining me again today. And I'll see you again, same time, same channel next week. Bye now.